With a vastly expanded renminbi pool, Hong Kong remains a top global financial hub, but bankers say the offshore renminbi market is still relatively small, and that makes Hong Kong more prone to volatility.
Market is far too small, and in this respect, I think we are aware that the market has been shrinking in the past 2 years. I give you some figures. I think in the past, the total offshore renminbi market was something around 2 trillion, of which about half were in Hong Kong. In the past 1 year or so, the market size has shrunk by some 50%, meaning that the latest deposit balance of Hong Kong was something around 500 billion.
The value of the yuan is among investors' concerns. The Chinese currency weakened more than 6% against the US dollars last year. But analysts say the yuan has stabilized.
I think the renminbi is going to stabilize around the current level with a range of 3%. The reason for the sharp devaluation in the past 3 years is mainly due to a strong dollar. In fact, the dollar index has gone up by 25% in the past 3 years. However, the Chinese economy has stabilized, and the growth has gone back up to 6.9% in the first quarter of this year.
If renminbi cross-border trade settlement and investment is the first step of yuan globalization, what is the next step?
I think the renminbi's next destination probably is to be a pricing currency, and afterwards it will become a reserve currency.
Looking forward, the Belt and Road Initiative as well as the Bond Connect program will bring game-changing opportunities for institutional investors.
Well, the biggest opportunity now we have is the Bond Connect. Overseas investors will be allowed to invest in the domestic market, and then again they will create fresh demand for renminbi, and that will help to stabilize as well as increase the value of renminbi.
Just to illustrate the vast potential, there are more than 50 Belt and Road economies where renminbi usage in cross-border transactions is lower than 5%. Cyrus Ip, CGTN, Hong Kong.